Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Monday, April the 5th, 2010. I'd like to go into some details here and show you why the market's totally about to fail here. The Dow Jones Industrial Average gained 46 points today. What technical rules state, if you're a bull, you'd want to see this thing break out here. Okay, this is the previous high. Let's get the right tools. Okay, this is the previous high. We broke out of that, okay, ran up here, broke out of this resistance. Let's draw a little line there and show the previous resistance. Okay, there we go, broke out of that. Now we want to see her pull back and consolidate on this level. She's not doing that. She started to right here, and then they're going to make a move higher. What they're doing is giving up sure footing for a quick stroke, so to speak, okay? That's going to allow them to win the battle of the day, but lose the war of the trend overall. They're going to break down. I'll show you why. I can show you proof in a second, but for now, just consider the fact that this should have pulled back here and consolidated, and when it doesn't do that and just keeps pressing higher like that, even against overbought conditions, it's giving up its position of strength by doing so. And this move to the upside will be short-lived, and you'll end up with a major move to the downside. That's something that I see coming here, and I definitely want people to pay attention to it. Again, we've got the overbought conditions here. Let's move on down. You'll see low volume on this move, even lower than previous. That continues to show weakness there. Just keep falling like that. You've got the MACD here, the convergence of these two moving averages. They're bouncing off each other, but they're coming a lot closer, and they're preparing for the bearish crossover to the bear side. It's going to be a very negative move for the markets. You'll notice momentum here on the histogram is decreasing as well. And moving on, sorry you couldn't see that histogram right here. These little bars indicate momentum, and they're decreasing over time. There you go. And of course, we have the overbought condition of the RSI, which is extremely overbought condition. Anything over 70 is extremely overbought, and you want to be bearish when you see that. Start selling your positions and getting out. This happens to be a very important indicator. It doesn't often come into the overbought or oversold condition. You'll notice back in March of 2009, when the market bounced substantially higher, or it started to bounce substantially higher, and a lot of people missed that. If you go back and look, your RSI was extremely oversold, below 30 at that time. The market ignored that and then got caught with their pants down. Didn't get long in time and missed the move higher. Now you're seeing the overbought condition where she's above 70, and that's telling us what comes next is not going to be bullish. All right, so be paying close attention to that. We'll see these conditions are on all of our market charts. Markets are made up of individual stocks. So if your markets are showing this, that means the masses, the majority of your individual stocks are showing these same conditions, okay? Now, hang on a second, cancel that. All right, yeah, go ahead, shut up. All right, let's go on, show my point right quick. I was talking about it. This condition is in, here's the NASDAQ, 7165. Here's the S&P, 7396, all right? You've got it in all your major market conditions. So though you're moving higher, that doesn't, just because the stock market moves higher doesn't mean that's the actual way to play that. The actual way, in my opinion, is to be looking for the short. You've got major gaps here that need to be filled. Those will get filled, and that tells me the big move, the real money, is looking for the pullback now. I want to show you another chart right quick. Remember what I said, major markets are made up of multiple stocks, right? So let's look at an individual stock here. A while back, ticker symbol BLUD, we issued an alert on this stock. Pull up the right, there we go. Bear with me for a minute, get this stuff up there. All right. On this day, we issued a short alert on this stock, so we wanted to be shorting this stock at this close or higher, and we're looking for a pullback. Now the stock continued to move higher, all right? Should have consolidated at this level, but didn't. Only did it for a couple of days, 3 days. That's not long enough of a consolidation to be substantiated. The stock continued to move higher, pressing higher like we're seeing in the overall markets now, and continued even though you had inverted hammers repeatedly here, here, here. She continued here. She continued to move higher here, continued to move higher. Now we told you you could stop it at the previous high, use the previous high as a stop, which is a technique most people use. The problem is with the overall markets breaking out to new highs, your individual stocks are most likely to do the same thing and follow that pattern, right? Remember, the major markets show you the overall pattern. So if they're breaking new highs, you expect your stocks to do the same thing. Having said that, we told you a tight stop could get you stopped out. So again, had you placed that tight stop, you got stopped out before the real move happened anyway, and you got that pullback. We've been saying that repeatedly over and over again. All right. So the other method to use would be to have had a 10% stop on that. You could have been stopping out at 10% had you got in. Basically anything that didn't hit $23 a share didn't get stopped out. So though you got under pressure for a couple of days, you could have started adding to your position. You could have waited for that, a little bit higher. You could have waited for that breakout and then started shorting. Whatever you did, however you played it, the end result was in fact the sell-off like we saw there. And you will notice on this chart, it was a substantial sell-off. Look at that volume there, 1.5 million. That's not grandma and grandpa there, okay? That's smart money getting out of this stock. And when they did it, it was quick, all right? See how fast that sell-off was? That's why you don't want to wait, in my opinion, this condition with the low volume behind the rally there. You see this low volume right here? We keep pointing to that stuff. See? You get a major rally on low volume. When the sell-off happens, it's going to be vicious. Like I said, I think it was Friday, or no, Thursday. You're going to have that sell-off really quick. You're not going to be able to get into it like you would typically in a lot of other situations. So that's why we're doing what we're doing. That's why we're seeing what we're seeing. At the same time, I want to point out again, overall markets are made up of individual stocks, okay? So when the overall market shows you something, it's basically what has already happened across most stocks, all right? Now what we're showing you here is an individual stock making that secondary move that we're looking for on the sell side, right there, boom, okay? We're seeing a few of these. There's not a lot of them out there, but there's a few of them. And it's showing to be a trend that's developing out there. So we start looking for the markets to start to show that same condition, okay? Remember, the markets are the overall view of what's going on with individual stocks because markets are made up of many individual stocks. Got that? All right. I can show you another one right quick, and it's important. So hang on a second. Get rid of that. Let's pull up RIM. Now, RIM's important because their condition happened due to Research in Motion, due to last week's earnings report. Remember, I've been saying that there's a trend in the market where analysts are getting overly optimistic. We saw that with Friday's jobs report as well. Remember, it was a positive signal for bulls because the jobs number was positive, but at the same time, it wasn't as high as they expected. That tells us that analysts are getting overly optimistic, and we start looking for them to get caught with their pants down. Right here we have RIM, Research in Motion. The stock had the same inverted hammer sell signals right there, overbought conditions. Let's see. She'd come up off the, well, hang on. She had the overbought condition of the RSI right there, okay? Lined up with the inverted hammer, okay? Same level, all right? Overbought RSI. Now the earnings came out. They were good. They just didn't meet analyst expectations, and they got hammered right there. See this big gap down, sell off? All right. That's the same condition we just pointed out to you in ticker symbol BLUD. All right. The more stocks we see do that, the more we anticipate the market's going to do the same thing. So like I said, the markets are right now at moving higher, are giving up sure footing, and this is actually the next move I see going to happen. All right. Now you know what I know. You see what I see. If you're not a full access member and you want to be one, if you want to know what's in my portfolio and why, as well as what we're doing on our small cap alerts, go to our website, sign up, pay the $145 for the full year, and boom, you're in. It is that simple. Happy birthday to my little sister today, April 5th. You're now old. Ha ha!